there's no doubt that the business world is changing and that the emerging focus on creating resilient organizations and communities is much broader than our traditional remit. Joining me down the line is business continuity expert Chloe Demrovsky to talk about the coming trends businesses should be preparing for. Chloe, 2016 is not in the too distant future. So what do you think will be the major trends for the new year?
What we found out, according to CEOs and senior executives, as well as leading risk professionals, is that cybersecurity is absolutely the issue that is top of mind right now. Not only is it the risk that they consider the most likely to occur, but they also consider it to have a really tremendous impact on their ability to operate and their ability to do business.
And how would you say resilient communities should adapt to the changing political, economical, and environmental external realities of 2016?
I think that can be a very useful framework for breaking it down. When we start with the economic outlook, we think that cybersecurity is a big issue, and cybersecurity in particular because of vulnerabilities in the global supply chain. We need to be able to move goods and deliver services across countries, across continents, and that complexity is growing and growing. We're so economically interlinked that if anything happens within that supply chain, something happens on the other side of the world, something happens in Thailand, there are floods, or something happens, a cyclone in the Philippines, it can affect my ability to do business in New York City.
China has, of course, led the business news agenda of late. Do you think this will continue in 2016?
With the China issue, that's a great example of what I'm talking about, because any economic uncertainty with the currency in China is affecting global markets very rapidly. So this interconnectedness is going to make it so that any risk that happens in China is certainly going to continue to affect us elsewhere.
I want to stay with China now, and the government has recently announced they're abolishing the one-child policy. This policy has had a huge economic impact, so its abolishment might also. But something like this is difficult to predict. Has it changed your findings at all?
Governments, of course, have the ability to impact what we can do in our businesses, what we can do in our communities. So government regulation and the changes in it are something that we're always looking at and planning for. China has been talking about abolishing the one-child policy for quite a number of years at this point. I think that they are certainly looking to it to help bolster the economy and to increase spending, as well as dealing with their aging population. This is certainly a problem that we see not only in China on the horizon, but in Europe, in the United States, and a lot of the developed world. You have aging populations. That's going to increase the burden on healthcare systems, and you need a younger workforce in order to be able to support that aging population.
So this raises the question, how should companies plan for the unknown?
The truth is, we don't know what will happen next. But what we can do is focus on designing strategies so that we can deal with whatever might come our way. So we use the best of our ability to conduct a risk assessment and say, okay, these are all of the things that might happen. Then in order to continue with an action-based framework, we have to assume the worst in our planning stage and say, okay, this actually is going to happen. There's actually going to be a tornado that flattens my facility and I'm not going to be able to use it in order to do business. So you plan for that worst case scenario, and then you design strategies to be able to protect your core competency within that worst case scenario.
How do you know how far you should go though? Because of course a lot of things might not happen, and that could therefore mean that you've wasted quite a bit of time. So how do you know what to really pinpoint?
So the risk landscape keeps growing, but business continuity boils it down into only 4 types of possible effects. One is something has happened to my facility, I can't access it. I cannot access the physical grounds. How do I continue to conduct business? Then you have an operational problem. There's been a strike, a riot, a pandemic. Something has happened that affects my operation and affects my ability to deliver goods and services. Then you have a technology problem. Something has happened to my technology. I can't access my information. My people can't get to their computers. They can't do business because they don't have phones. And the final one would be organizational problems. These could come from very interesting sources that we don't typically think of as business continuity problems. This would be mergers and acquisitions, succession planning, something that affects your overall strategy and strategic plan for your business. So when you think about reducing all the huge possible landscape of risks into just 4 effects, that's really powerful for enabling you to take that action-based approach.
Business continuity has mainly concentrated on the consequences of physical interruptions to mission-critical business operations, analysing potential impacts and putting strategies and plans in place to mitigate these impacts, as you suggested. So, is this the way to do it? Are there other things companies should also be looking towards?
I think business continuity is playing an increasingly important role in terms of the downside strategy for companies. And we certainly see this in industries where business continuity has a robust presence. In large part, that is either because regulators are requiring it or because customers are demanding it. Instead of it just being about a physical problem and saying, okay, there's a flood in my facility, how do I get the water out? That's, of course, the essence of business continuity. But now we're looking at saying, okay, so if you look at the Volkswagen emissions scandal or the Toshiba accounting scandal, you're saying, could a business continuity program have analyzed the potential for these sorts of internal risks to happen and create a plan for either preventing them or mitigating the impact if something like that does occur?
Well, let's take the VW scandal. How would you advise them how could they have planned ahead for this to mitigate this risk?
Going into the future, especially in 2016, especially as millennials come into the workforce in droves, is we're seeing a higher expectation for good governance. You can't just look at the bottom line anymore. You have to look at also the social and environmental impact of what you're doing. And in that sense, investors should also be looking at companies that they're potentially investing in and use business continuity as an indicator that that company is acting responsibly within their community. So we think that this could actually be a very powerful tool for investors to use to see whether or not a company is actually acting responsibly. So the emphasis on good governance is only going to increase, and I think companies should get ahead of it by making it a part of the fabric of their company now, rather than just saying, okay, I'm going to react to the external pressure to create a more responsible culture within my community. So Volkswagen was responding to customers' requests and regulatory requests that emissions were lower, instead of making it an internal approach and saying, yes, we really do want to reduce emissions. They didn't have that kind of internal commitment to the problem, and that's what we need to see more of from companies.